every investment that I look at, I'm like, can I have a system for that? And can I hire a person for that? That is the lazy strategy. I literally live the most boring life. Like so many people are like, Melissa, you need to do, Instagram and TikTok and all this stuff. And I'm like, I literally invest from my couch. Like, I'm not even joking. I've never seen any of my long-term rentals. I've never flown to the markets. I'm in 6 different markets.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why? Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Melissa Nash. She's a real estate investor, educator, and wealth strategist who's built a $5 million rental portfolio using her signature lazy investor method, which I'm very, very excited to hear about. Melissa, we just found out that we're both in Southern California, so that's pretty cool. But first, I want to say thank you for coming on the show. Thanks for taking the time out today to chat with me and my audience. I appreciate it, and I'm really looking forward to the conversation.
Likewise, thank you so much for having me today. I've been looking forward to this conversation as well. And hello to my neighbor here in Southern California.
Yeah, exactly. We'll have that. I need to start doing some of these fellow Southern California residents do some of these in person someday. I just need a better podcast studio to do that.
I'll be there.
All right, perfect. Can we start with just kind of telling your story, your background, fill in. I left plenty of blanks there, so I just love to hear it in your words, kind of a bit about yourself.
Absolutely. So I'll dive right in. So I like to describe myself as a self-proclaimed serial entrepreneur. I've always been an entrepreneur, and you've probably never heard that before from a real estate investor. I feel like most, serious real estate investors are entrepreneurs. And I think it's because we know how to take a little bit of risk. And I think that's kind of what has made me successful where I am today. I've attempted to invest in real estate for, my first property was over 26 years ago. And I failed several times. And I kept on, licking my battle wounds and getting back up and doing it. And I think that fear is healthy. I think it's good. And I think I'm always up for a good challenge. I'm a mom, I'm a wife, I have 4 kids. And everything that I do in my portfolio is how can I free up my time? How can I spend more time with my family? How can I enjoy being around my loved ones? How can I build this wealth machine to help not only myself and my future retirement, but what do I want that retirement to look like? And then how am I setting up my kids for retirement? Well, how am I setting them up for my retirement, essentially? So how can I help support them in their careers and their lives, but also, when we're long and gone, they're going to inherit this, and how are they going to treat it, and how are they going to protect it? So everything I've done is I've built it in a way that I could be as passive and hands-off as possible.
Yeah. I think it's a common theme. Certainly the control of time for family. I think that certainly resonates with me a lot. And it's funny. It's one of those things that I keep falling back on whenever things are hard, which they are hard in the real estate market currently for a lot of people. But I think about that, and it's like, well, I do still have control of my time. So I think that's like the sort of ultimate freedom that a lot of us are looking for. Tell us, you said, you had some struggles 26 years ago trying to get into real estate. Tell us a little bit more about the journey. It's kind of, some of the things you did and now, and then, work us to where you are today.
Yeah. So number one, I had zero education. I knew that rich people owned real estate. I didn't know why. I didn't know how. I didn't know about tax benefits. Like, I literally knew nothing. I just knew because my husband's grandmother owned real estate in Los Angeles in the 60s and 70s. And I saw her retirement, and I saw that, she was the rich grandma that everybody went to for money. And it was because she had this real estate portfolio. And I saw that it was time. She owned these for a long period of time. And then after her husband passed away, she was able to, live off of her rental portfolio and have this amazing retirement. And I didn't see a lot of the behind the scenes stuff, and I didn't actually know a lot about anything. And she passed away before I even learned about it. But I just kind of thought, oh, she just bought real estate. That's it. That's all you have to do. So I attempted that the first time. And I tell this story often, but I literally didn't even know that, like, you should probably verify what rents are, and you should vet out a tenant, and not all tenants pay rent. And, you should probably get an inspection report on the property and get those things taken care of. And, I wasn't even trying to burr something. I just was like, hey, there's a house for sale I was living in Georgia at the time. And I was like, oh, that's a cheap house. I'm just going to buy it and put a tenant in there. It's not that hard. I mean, how hard could it be? Yeah, it was really hard, and I failed. I was not prepared in any way, shape, or form.
Yeah, it is hard. It's simple but not easy, right? You buy real estate, you put a tenant in it. That is on surface, that is pretty simple, but it's not nearly as easy as it sounds, and there's a whole lot more to it, both from a structure standpoint, the actual physical real estate, and also the tenants that are living there. So that was in Georgia, but now you're here in Southern California. What was that? How did that happen? When was that transition?
Yeah, so I'm from Southern California. I grew up down here, and my parents had moved to the South after well, no, it was probably, gosh, yeah, they moved there like 30 years ago or something. And so I don't know, after my husband and I got married, we were like, hey, let's go check out the South. It's really cheap. It's really affordable to live. We could buy our first house. I love the South, and it was really fun. I definitely missed Southern California. My husband's parents had moved to Washington State. So we kind of followed them back to Washington State after Georgia. And then after the rain, after a while, and actually our next investment that we tried to do was in Washington State. It was a short-term rental, but it wasn't a term back then. It wasn't a short-term rental. I was just obsessed with this idea of, how can I buy a vacation rental for us? Like, we wanted to use it and we wanted to enjoy it. How can we do that while someone else pay for it when we're not there? And this was now 2007. 2007, 2008, kind of like right around that time frame. Prices were really, really high. We know what happened, with the crash and everything after that. But I didn't even know like anything about short-term rental. I mean, literally, there was no Airbnb. There was nothing. I knew there's a little coastal town on the Washington coast that we love to go to. We had rented houses there before. And so I thought, how hard can it be? And so we got there. Well, I just kind of jumped in, and we bought the house, and I was like, we'll figure it out and we'll make it work. The property management companies, I had no idea how much money that they took. In this little town, I don't even remember the exact number, but I know now property management companies for vacation rentals take, well over 30% usually. And so I'm sure it was something like that. And I was like, oh, no way am I going to give them all that money. Then this whole thing isn't going to work. Again, I didn't know how to run the numbers. I didn't know how to run the math. And so I was like, oh, I'll just do it myself. We couldn't find a cleaner. So I would put it up on a site. It was called like, I don't know, it was like you traded time with other hosts or with people who owned other properties.
Okay.
And that was the closest I could get to like an Airbnb type thing. I wish I would have invented Airbnb. And so we would just put the word out, friends would stay, and then they would tell somebody, and they'd tell someone, and I would tell everyone, hey, you got to clean up when you leave. You have to do laundry. You have to vacuum. It was quite interesting. Again, I wasn't educated. I didn't know how to run the numbers. I didn't know any of that. And I think that's the number one thing that I have learned through these errors is education and running your numbers.
Are you planning a remodel or construction project? Overwhelmed by the process? Over budget? Extended timelines? Strained relationships? We are all too familiar. At Lark Construction Services, we help homeowners and business owners take control of their construction journey, from reviewing bids and contracts to catching red flags before they become costly mistakes. Our Clarity Audit is a one-on-one expert review of your plans, estimates, or current progress, giving you the peace of mind and a defined action plan to move forward with confidence. Don't let confusion lead to costly errors. Visit larkconstruction.com and schedule your free call today. Lark Construction Services, saving you time, money, and stress.
Yeah. So I know that's a big part of what you're doing now. Walk us through a little bit about, kind of your current strategy, what you're doing in, having some challenges in the real estate market, but continuing to come back to it. And I think that you said you used the phrase, sort of we'll figure it out, kind of, we'll just do it, we'll figure it out. I think that is like the classic entrepreneur mindset, is like, well, I'll do this and I'll figure it out. Eventually we hopefully learn that there's more to it than just figuring it out, and we start to put in systems and use technology and teams and all that. So where are you at now with real estate, and what are you doing to kind of use what you've learned and carry that forward?
Yeah. So, I kind of went through, we ended up having to close down. We owned a clothing manufacturing business around that 2008 time frame. And we wholesaled, and we would import from overseas. And a lot of our stores that we sold to were going out of business. And so we were stuck with all this inventory. And I mean, it was just, we know what was going on in the world at that time. And it was very crazy. And I was like, I need a recession-proof business. Like, that's what I have to do. And so we kind of sold that business and moved on. And I was like, gosh, what is next? And I literally, for the first time, went and I took a corporate job. And I would, kind of sitting around, like just chatting with different people when we just had downtime. And the conversations were the same. People were having the same conversations as me, is I was like, what are the recession-proof businesses? Like, what is a side hustle? What can I do? And it always kind of kept coming back around to real estate. And so I would talk about real estate, and I would think about real estate, and I would talk to my coworkers about real estate. And I started education and just started listening to podcasts. And, somebody said to me at work, I remember he said this, he said, I wish there was a way that you can invest in real estate in another state from where you live, and you didn't have to do anything. Like, you didn't have to be the flipper or work with contractors or whatever it is. And I was like, yeah. And I remembered that first property I bought in Georgia. And I was like, that property was so cheap, and Southern California is so expensive. We can't do this here. The cash doesn't make sense here. There's got to be a way. So that led me down my journey. And I ended up finding kind of a mentor type person. And he introduced me to a lot of people, but I also understood the true profits of real estate for the first time. It's not just about the cash flow. It's about buying in areas that have a little bit of appreciation. It's about the tax benefits. It's hedging inflation, using leverage in your benefit. The US dollar is going down in value every single year. Like, take advantage of that. So once I understand that, how real true wealth is created, and it's not timing the market, it's time in the market. And I flipped the switch and went, okay, that's what my husband's grandma did. Back then, she was buying properties in Los Angeles for, $20,000, $30,000. I don't even know. But it was still expensive back then. And she still had to get loans back then. And because she did that is why she was wealthy, 20 years later. So that was kind of where it all switched. Anyways, I bought my first property in Birmingham, Alabama, and it was a, done for you, kind of a turnkey deal. It was already renovated. It had a property manager in place. It was really cheap. Yes, it cash flowed, but I was like, you know what? I'm going to just buy it and hold it. That's going to be my strategy. And I knew I did not want to be a property manager. Like, absolutely not. I was like, there is no way I'm going to be a property manager, but I knew how important property management was. And so I put a lot of time and effort into making sure that the property manager was good. And I still have them today, like 11 years later, they're still my property manager. And that little property will literally pay for my daughter's college. When we bought it, we kind of designated it into her name. She was like, gosh, well, she's going into college now. She's 18. So, and we've had it for about 11 years. And we kind of designated each property we bought, we've kind of designated it to like different kids' names kind of in a way.
Yeah.
And so the property now, I mean, it cash flows great, phenomenal. We've increased the rents, double, triple. And so again, it just proves my point of just longevity in the market and just letting it do its thing.
Yeah. Yeah. It's, you do, I think when you're new, you might focus on one of the benefits of real estate, but then you start to think about, like, as you said, that longevity of it, the time in the market. There's just so much. I mean, you've got ongoing tax benefits. Your cash flow, even if it's not great to start, might go up over time. If you're in an appreciation market, now you have, the value of their property going up over time. You have principal pay down in a lot of instances. So what you owe on that property, so that the difference between, what you owe is going down, the value is going up. And so you're creating equity. I mean, there's just, but none of that comes quickly. And so there are times where, as a house flipper, you can make a chunk of money quickly, or a wholesaler or whatever, but you kind of have to have things work out in your favor with regards to the market. You also have to be smart at those strategies. But if you just look at it and expand your time horizon from, 6 months or a year to 6 years, 10 years, 20 years, now it completely changes what that real estate can mean. And yeah, people who bought property in Los Angeles for $30,000, like, they're doing quite well now. They don't have to they got all of that appreciation. It may have been a stretch then. And it's like, well, people are going to say, well, we can't buy a property for $30,000 now. It's like, yeah, but what are the properties going to be in another 30 years? Probably not the same as they are now. They're going to be quite a bit more. So it's like, you just have to think about it, that sort of get in and let time do its thing, and, be smart about it. But it's, I think the strategy is just very, very sound. Your, the bio I started, it mentioned kind of your own strategy for I think lazy investors as well. But tell me about that. Is that just maybe go in a little more detail on your particular strategy?
Yeah,
and what you're teaching people?
Yeah. So every investment that I look at, I'm like, can I have a system for that? And can I hire a person for that? That is the lazy strategy. I literally live the most boring life. Like so many people are like, Melissa, you need to do, Instagram and TikTok and all this stuff. And I'm like, I literally invest from my couch. Like, I'm not even joking. I've never seen any of my long-term rentals. I've never flown to the markets. I'm in 6 different markets. I closed on 2 properties last week, all from my phone and my computer. And it's funny because my husband literally, like, he had to sign on these ones because these ones we did in his name. Because I set up the LLC under his name for some reason. I don't know. We just do everything kind of like, some LLCs are in his name, some are in my name, some loans are in mine, some are in his. We just kind of trade off, I don't know. Whoever has the highest credit at the time, like, So anyways, he's like, wait, what am I signing on? I'm like, don't worry about it. I'll tell you about it later. I mean, it's the most lazy way. I'm very organized and I have systems. So, and when I'm building my portfolio, and I'll tell you about the actual, like, what I do, like, more specifically, but I also think about, you want to diversify a portfolio. So yes, I have some properties that are more cash flowing than others. I just bought a property in Little Rock that cash flows like $100 a month. And I don't really care because I only spent $8,000 total out of pocket to get the property. Mm-hmm. And it was already renovated and it was already with a property manager and they just placed a tenant. So, okay, that's the most lazy investment I can think of. So for me with that property, I'm like, I don't care. It's this year it's cash flowing $100 a month. That's $100 in my profit in my pocket. I only spent about $8,000 to get that property. My husband signed on it. I didn't even have to sign on it. We just put it in an LLC that we already had. And so at this point with my portfolio, it's about connections and people and opportunities and networking. But for the new investor that's coming in, I'm like, just get started. Just, you don't have to be a wholesaler. You don't have to be a flipper. You can invest in California and you can buy, a property that's already done in another state. So when I'm building and thinking about properties, I'm like, okay, how can I create more cash flow? At one given time, I could be like, okay, 5 of my properties cash flow really well, but 5 don't. And I'm okay with that because I have this bigger strategy in place. I have short-term rentals, and a couple of those are actually lifestyle rentals. I don't profit from them, but they give me insane tax benefits. And I get to enjoy them and use them with my family. And they are here in California, so they do appreciate really well. So going back to your question, what is lazy investing? So like with my short-term rentals, I'm like, I'm not hiring a property manager. They're going to take, 30% of my profits. I'm going to figure out how to do it myself. And I have 5 short-term rentals that I self-manage. I don't even spend 20 minutes a day on them. Like, not even. And it's because I've created the systems to run itself. And that's the biggest thing as an investor, is staying organized and running the systems.
Yeah. Yeah. Do you have certain tips or tricks, tools that you like to use for these systems that make it easier to do these things from your couch? I'm sure people are going to think, sounds very, very appealing. They're probably, some of them are going to think it's too good to be true because they don't know how to they don't know how to run a real estate investment portfolio from their couch. So, what are some of the things that you use to kind of help make that that lifestyle for you?
You know what? Again, I make it as easy as possible. Google Sheets, just a Google Drive. I have Dropbox and I have Google. And honestly, I have a spreadsheet, and at the top of the spreadsheet is all of my property addresses right across the top. And then the next thing down below there is saying, like, if it's in an LLC or if it's our personal name, because we bought a bunch of properties under our personal name when interest rates were really low. And so we'll say, like, who owns that property? And then I'll have, the mortgage company. Of course, every time it gets sold, you have to go in there and you have to update it because these mortgages sell so often. And then I put in there, like, is it escrowed? Who's paying the taxes? I like to escrow things because I want to be hands off. Some people hate escrowing their mortgages. No way. I want it escrowed. I don't want to think about it. And then I put my auto pay with the lender. I do not do my auto pay with my bank. And I do that specifically because if the loan gets sold to another bank, then that lender will forward my payment to the new bank, because it's happened to me before.
Yeah.
And so I literally years ago, I learned this one. This is just one trick that I'll just kind of throw out there. Is I used to have my mortgage payments automatically drafted from my bank account. So like Wells Fargo. And when one of the mortgages got sold, Wells Fargo just returned it because it got sold out. And so the bank just sent it back to Wells Fargo or something. I don't even know what happened. And so they just kind of put it back in my bank account, and I didn't even notice it. I wasn't really tracking it. And then all of a sudden the mortgage went like 30 days late. And that's obviously like horrific. We need to have good credit to continue to invest. Yeah. And so then I learned that this is, again, just my experience. If you set up auto pay with the actual mortgage holder, and if they sell it, they will send that payment to the new loan that they sent it to for you. And so instead of it just coming back to me and then me not knowing about it, I don't know. I just have felt that was a little bit more a better system for me. Again, everything is, how can I simplify my life? So everything is automated. Everything is automated. My long-term rentals, I'll have who the property manager is, what their portal is, what my login information is. And then I have on there like certain dates with each of my properties where I have a calendar set up. So it says, reach out to so-and-so property manager and ask them to go out there and change the air filter, because we know tenants don't change air filters very often. And so I'll have little reminders like that for each of my properties that just pop up. And I'm like, cool. I'll message the property manager really quickly and make sure, and while they're there, is there any branches over the roof, or, you know, how's the landscape looking? Because that's also deferred maintenance that can cause you trouble down the road. So I just set up little email reminders for myself. And then with my short-term rentals, I have a whole bunch of systems that I use to automate that one.
Yeah, short-term rentals are a bit more labor intensive, I'm sure, but yeah, I think some of what you said there in just using Google Sheets is it's a great point that you don't have to overcomplicate it. You know, I think people hear I use systems and I put, it's like you could really just say, like, I've developed good habits around how I manage this, and it doesn't have to be so daunting that people think, oh, you're spending tons of money on tech or whatever it is to make this happen. It's like you just actually have a way of tracking things and know what's going on that works for you, and a lot of that can be done free. You said, you have Google Sheets. You can put reminders into your phone that just they come up, however often they need to do these things. And it's like that stuff that doesn't take very much time to set up. And then, as you said, will save you even the tip about, kind of having the auto draft come via the lender and not your bank account, because it is your bank account doesn't care if the money goes out or doesn't. It's your lender that cares, and you don't want to have something silly like that affect your credit. And if you're working with, maybe if you have one property or if you're your own personal home, it's not hard to remember those things. But when you start to accumulate properties, you've got, and multiple LLCs, as you mentioned, keeping track of all that stuff can actually get pretty complicated and daunting if you don't put some of it on, some level of automation. I think these are just like smart but simple things that you can put in place to save yourself trouble. Ultimately, is finding out that you didn't pay a mortgage because you got a late notice and it affected your credit is that can set you back. So I think all of that is really helpful advice, to be sure. Well, let me. I want to switch gears, Melissa. I want to get to ask you the questions I ask every guest, and the first one is based on the name of the show, being Know Your Why. So I do ask every guest, what is your why? What's ultimately driving you at this point? You've had a fair bit of experience in the real estate world, both good and bad. And I think, it's always interesting to me to hear what people are using as sort of a motivator, especially after they've been doing it for a while and kind of seen what the real estate world looks like.
Yeah, this is a pretty big why for me. As I explained before, I've been an entrepreneur. I mean, my husband and I, our entire marriage, we've been entrepreneurs. And other than a short amount of time when I kind of went back to that corporate world. And as an entrepreneur, gosh, I spent so many nights, sleepless nights, just not knowing what the future held and like where the next, not even just like where the next money was coming from, but it wasn't always controllable. It was like, are they going to pay us? They owe us money, but it was more like retirement planning. I didn't have a 401k. I didn't have an employer putting money into things. And, even if I did, I don't know, it just never made sense to me that like, you can't use that money until, you stopped working and you're retired. I'm like, well, what about now? Like, I want to enjoy life now. But it was more the financial security of knowing that I would be okay at retirement. It's so expensive, and retirement homes are so expensive. And I didn't want to put that burden on my kids. There's so many things with that I just wanted to sleep good. Honestly, I was like, I just want to just have peace when I went to bed at night. And so once I realized that real estate could be it for me, it's easy to just jump ahead and get like stressed, like, oh my gosh, I have to buy this, and how am I going to buy this, and how am I going to get money to buy the next one? Just start with the first deal. Just get one done and get the confidence and the education. That one property in Birmingham gave me the confidence to go, okay, I can do this. And then you figure out the next strategy or the next opportunity. You talk to somebody that's like, hey, I'm doing this over here. And, it's just that first property is just all the confidence in the world. So for me, it was just like, okay, I can do this now and I'm going to figure it out. And then also, the other part of that, as I mentioned earlier, it's my kids. They're adults now, and I'm taking my youngest to college, and it is expensive out there, not just for college, but housing. Like my son is renting a room for like $1,000 a room, and it's a shared room. I mean, that is insane. And so I'm like, how can I teach them to start now and not have to, go through everything that we've had to go through? And I want to teach it to them. I'm not just handing it to them. I'm not like, hey, you get this portfolio. Like, no, some of these properties are in their name. They've been saving up. They've been buying. Two of my kids bought properties on their own before they were 18. And they're not taking the cash flow from these properties now. That's not the point of it. The cash flow stays in the properties to sustain the property. This is for them, 10, 15 years down the road. So it is a long-term investment. And so for me, like having that financial security for myself, but also creating it for my kids, that's my why.
Yeah. Yeah. I love that. I think that is, it's better, creating that, environment, the education, the mindset around investing and owning these real estate properties for the long term is far more valuable to them than just handing a portfolio, at some point in the future. It's like, oh, here you go. You got a bunch of properties, figure it out. Like, it's much better to have them involved now and let them develop their own investment strategies. And as we've already talked about, time is your strongest weapon in investing. And so if you start that clock at, before they're 18, like that's huge, huge amount of just appreciation and education and growth that can happen over time. So I think it's just such a smart strategy. I think that's, if at all feasible, a really great way for people to kind of set their kids up for the future in doing things like that. So smart. Melissa, thank you for coming on the show today. Thank you for sharing everything that you did. I think it's really for people listening, the ideas here of just, kind of getting started, keeping it simple, and letting time do its thing, I think is just kind of the overarching message here that I just think it's so valuable. So thank you for being here and sharing all that you did.
Yeah, absolutely. And, if it's okay, I can mention to the listeners, I have a lazy guide to real estate investing. That's like all the shortcuts and the tricks to get started. It's at my website, hellomelissanash.com. They can grab that freebie and hopefully get you inspired to just take action. Just keep your education going. There's so much free education out there, like this podcast. Just grow your knowledge. But at the end of the day, you have to do something with it. You can't just sit there and be stuck in analysis paralysis. Whatever, if you decide you want to flip, go and flip. If you want to be a wholesaler, go and be a wholesaler. If you want to do, done easy rentals, go do it. But yeah, just take some type of action. And you know what? Call a lender today. Just see if you can qualify to buy a rental property. That's a good step to take as well.
Yeah, really smart. And you helped me out with the final question of how people can reach you. So the website, you said hellomelissanash.com. Is that correct?
Yep. Yeah, I totally jumped the gun on that. Yeah. Hello, Melissa Nash. Yeah. Melissa with one L and two S's. So hellomelissanash.com. Grab that freebie. And yeah, I can't wait to connect with everybody.
Perfect. Well, we'll have that in the show notes so people can find you. It's been really great. Folks listening, make sure you connect with Melissa, check out her website. Please like, rate, and review the show so we can continue to get more great guests. And as always, thank you so much for listening. And thank you, Melissa, for being here.
Absolutely. I'd love to come back.
Awesome.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?